Hi, Rick. How are you?
I am fine, Robert. Good to see you.
Good to see you. Welcome to Property Potential Podcast. For those that are listening today, I'm with Rick Rosenberg of DPFG. Rick, for those that don't know, why don't you give us some background on Development Planning and Financing Group? Tell
Great.
us a little bit about what your business does and who your customers typically are.
Great. Well, thank you. Thanks, Robert. DPFG is a national consulting firm with corporate headquarters in Southern California. Uh, I run our Texas region. I'm the managing principal for Texas. We've been in business over 30 plus years advising developers. We represent developer side only on helping them identify optimal financing solutions for their projects. The most active part of our business is helping developers identify methods to finance infrastructure, roads, utilities, things of that nature for master plan communities, large community developments, mixed use projects. Over time, we've expanded that to include what I would call economic development programs as well, incentives, public private partnerships to help quality projects get off the ground.
Great. And maybe you can give us some background on, yourself and sort of how I know you've been with DPFG for about 15 years now in Austin, but you've worked all over. You've been CFO for Centex and other home builders. You've got an incredible career. I'd love to hear a little bit about it.
Well, thank you. I do have almost 44 years now of real estate experience. Started out in Chicago in 1980. Primarily, about half of my career has been on the consulting side. Initially focused on helping institutional investors as pension funds and corporations on a lot of their real estate investment strategies. I've also had a couple of stints on the acquisition side, as well as a number of years working in what I would call the land development side of the world. 10 years with a company in Houston, Maxam Property Company, as their CFO, overseeing our commercial portfolio, as well as the financing related to a series of master plan communities throughout the Western United States and Puerto Rico. And then 2 stints with national home builders, Hovnanian Homes in their Houston division, and Centex Homes in their Arizona division as their CFO, where I was principally involved in putting together land transactions. Not so much the corporate accounting stuff, but the land finance related to putting in place good land purchases for the company. I've been with DPFG almost 15 years now. It'll be 15 years next week, actually. Started in our Phoenix office, and then they asked me to move back to Texas about a year after I joined the firm. And we've been very privileged to be successful here in Texas in that time.
That's wonderful. What are some of the skills that you've kind of accrued over the years that you find yourself using a lot at DPFG? Is it a lot of the financial modeling skills, or is it? I'd love to know what your experiences and kind of how you use them as.
Yeah. The good thing is that having been exposed to multiple types of real estate over the years and multiple roles, I see myself and what we do for our clients is really be their real estate advisors. Obviously, the ability to prepare financial analysis for the specific financing programs we get involved in is a base of what has to be done. But I think what I try to add is not just here are the numbers, but what do the numbers mean? What should you be doing? What are some alternatives? Having been in their shoes in a sense as a developer, what is important to them? Someone who just comes from I've created spreadsheets for 10 years. I know how to do this, but not understand what drives a developer's investment activity or investment decisions. I've been in their shoes, and we understand that mentality and hopefully it helps us advise them with the best options. The thing we try to do the most is not just here's the answers, like find out what they're trying to accomplish and then help create the answer to achieve that objective.
So what role does data and analytics play in your decision making process? Are you, um, are you looking? It sounds like you're looking at the entire picture and not just a set of numbers.
Yeah, we don't get all that involved in the developer's pro forma, although we can help them do that, and we've done that in a lot of cases. We need to understand what their business plan is because it rolls into our financial analysis for the various financing programs that we put in place, whether it be a public improvement district here in Texas, or a municipal utility district, or tax increment, or other economic development program. We need to understand what their business plan is, so we can look at absorption pace, timing, phasing, and give without good inputs from our clients and their engineers, we have bad outputs. But what we try to do is not come up with too many of the assumptions on the development ourselves. We can certainly provide a voice of reason, perhaps, on some of those assumptions, but and then look at how those roll into the financing programs and what we can do to look at different options and different sensitivity analysis.
And how do you evaluate risk? I mean, it's certainly, a lot of the development projects come with a fair share of risk. Um, what is your what's your approach to pricing in risk on a project?
Well, the a lot of discussions with the clients about where they see the risks. Are we going to look at it longer absorption periods, slower absorption periods? Um, how does that impact the cost to carry for our clients relative to the financing? And really, it's that sensitivity analysis and looking at different options and saying, look, you may not get this from the city. What happens if you don't? And looking at those sort of aggressive scenarios, base scenarios, conservative scenarios. Uh, Nothing earth shattering like anybody else does, but what we try to do is be realistic in our expectations of what could happen. And where we get into a lot of that becomes is when we're negotiating the business agreements, not just the financial models, but the business agreements with the cities or counties involved in the financing programs, looking not from a legal perspective, from a business perspective, how can we mitigate risks and how these documents are created, our obligations of our clients to deliver certain infrastructure and the ability for them to manage their business and not be forced into doing things that are not market supportable.
You bring up a bunch of great points. How do you advise clients on market fluctuations and economic downturns? You know, the Federal Reserve held interest rates steady today. Would love to get your thoughts on that as well. But obviously, interest rates are a huge lever for project financing. I know there's a lot of questions in that, but maybe you could unpack that. And
Yeah. So we're not prognosticators on interest rates. I had a client the other week say, "Are you using such and such to project out the interest rates on our financing?" It's like, no. We rely upon information we get from the market makers, the underwriters, and other folks involved in the bond programs we do. But what we try to do, once again, we'll look at different interest rates and see the impact of that. Uh, for a lot of our clients, they're going to be developments that are going to be done over 5, 10, 15 years. So the interest rates are going to change significantly.
right.
We have projects that, the first phase we did at 4%, and now the phase we're doing now is going to be at 7%. And we just advise our clients you're not stopping the project because the demand is there. So you just have to manage around the interest rate and try to deal with that. I think what our clients want in terms of interest rates, obviously we want to go back to what it was 2 years ago when our bond deals were 3.5%. But that was an anomaly. We used to think 5.75% was a great rate, and right now we're at 7 or 7.25% on some deals. That doesn't mean the deal doesn't work. It just means you have to, understand the impact of that increased rate. What I think our clients want, and what I was glad to see the Fed did today, was it's never going to be certain, but just leave it alone. Don't mess with it and let people operate their business. We work with a lot of home builders, and obviously the interest rate issue is critical to their buyers. And what the home builders will tell you is that they can deal with almost any interest rate as long as it's not fluctuating a lot.
Sure.
Because people, once they know that, okay, it's been that number for a couple of months, this is the reality, and I adjust my expectations. But if every month that 8% mortgage then becomes 8.5 or 9 or 6, people are going to say, I'm going to wait. And that's not good for anybody.
Right. Projects are long enough as they are.
Yeah, we just on a project we're working on in the Houston area, the client's not going to request bond issuance until sometime next year, and if the assessments involved, the mechanism to create value for our client is put in place now, which it will be. The county is basically saying, well, you should be using the current interest rates. Now, my response was, let's use a lower interest rate, because in case rates go down in the future, we can get more dollars. But if rates go down, we'll just lower the amount of the assessment. Our clients won't get as much, but we need to provide for the ability to get what they hope for, and then deal with the reality when we actually do a transaction.
Do you think, just generally speaking, and I know you don't have a crystal ball, do you think we've peaked here on interest rates? Is this about as high as you can see us going?
I'd like to think so. I just read the comments from the Fed, like they may still raise it next month. I think they're just trying to prevent people from getting comfortable, which I don't understand, but I'm not an economist. People want some certainty so they can operate their business. But I've had people, I met with a mayor in a small town who I think speaks very highly of himself in terms of their knowledge, and he was convinced that interest rates were going to go down significantly next year. And I was like, oh, I'm glad you think that. We don't know, and we can't worry about it. We try to deal with what we can understand.
Your business has seen a lot of innovation throughout the years, and obviously, there's different financial products now that weren't available for developers, years ago, or even 1-2 years ago. What are some trends that you feel cannot be ignored? What are some just kind of overarching things that you have seen that home builders, developers should be paying attention to?
I think a couple of things. Most of the programs we work with involve a partnership in a sense with a city or a county. And we have to just realize that the city or county is going to have expectations and control thoughts that have to be taken into account. And that's not going away. It may get stronger, hopefully not more, but it is what it is. So I think we have to be prepared, understand that we're always going to have to provide a higher quality project to demonstrate why we want the city's partnership, even though it's not a financial risk partnership for the city or county, but a better project. I think we are seeing cities and counties saying, we want to make sure that not only is this a good project, but that the developer is well capitalized and has enough funds to complete the transaction. So, there's probably been a shrinkage of the developers who probably are going to be acceptable to certain cities and counties. So maybe there's a consolidation to builders and developers of scale. But more importantly, it just means developers need to be straightforward and upfront about where their capital and what capital they need, what capital they have, and their ability to perform. The last part of that would be, we are seeing probably for more use of these mechanisms for mixed-use projects, commercial projects, where we get to be a little bit more creative, perhaps combining 2 or 3 of the different mechanisms to try to mitigate the economic impact of using the mechanisms. So industrial, commercial, that quite frankly, very often is more desirable by cities or counties, may be more supportable through these mechanisms than they once were. We are working on 2 big industrial projects that in jurisdictions that probably would say they wouldn't do it for residential, even though 90% of what we do, the mechanisms we use, have been used in Texas for residential. They don't want to encourage large-scale master plan communities or large-scale subdivisions in their community, but they want the economic impact of high-quality commercial and industrial projects.
You've worked on countless projects. Is there any project in particular that stands out as being something that has a real story behind it that, has an everlasting impact on left an everlasting impact on you or, your approach to, current projects?
I'm gonna be careful of what I say here. I think back to the first public improvement district project that our firm worked on here in Austin, a master plan community called Whisper Valley, about 2,000 acres. When we started on it, PIDs were not really a viable mechanism in Texas. We and others worked to modify the statute.
For those that are new to this type of financing, maybe you could just spend a quick minute or two explaining what a PID is.
A public improvement district PID really utilizes an assessment on property supported by a lien on the property to help fund infrastructure. We very often use bonds issued by a city or county, but not backed by a city or county, as a construction financing mechanism to build roads, water, wastewater, and other infrastructure requirements. We did our first project, the Whisper Valley project, in 2011 here in Austin, and it was about $40 million, a very creative structure, considering it hadn't been done really before in Texas to any scale, so more complicated than probably it needs to be in today's world. But we've now gone to over $2.4 billion of these bonds throughout Texas without any defaults. So we're pretty happy with the market that's been created. We know we've been a big part of that. But what I like about Whisper Valley is that it really helps spur major development on the east side of Austin, where there are growth opportunities, provide more housing, which becomes more housing creates more affordability options. But also, the developers of Whisper Valley also are very unique in that they have a lot of their utility services are provided through geothermal. We're not part of the geothermal part of the project, but it really is a unique aspect of it, and it has been attractive to a lot of folks, and the project's been continues to be very successful. So that being the first one that really put us on the map is one that we will, and colleagues of mine helped start that project. I've had the privilege of working on it since the initial bonds. So it's been, that one is really points out there's a lot of war stories in our world, and some of which I prefer not to talk about because it gets, dealing with the cities and counties can be, it's a political process. It's an entitlement process, just like zoning. So it all gets wrapped up. So anybody who's gone through zoning challenges or discussions will deal with this. It's the same stories involving a financing entitlement. But we've been very proud of the fact that we almost always, 95+%, been able to work through those situations for our clients.
You're constantly juggling many balls, working with developers, city officials. What tips or advice do you have to anybody that's listening when it comes to building long-term relationships? Certainly these projects are all long-term. You do a great job at managing all these different parties. What are some tips or secrets that you have that you can share?
I think the best thing I could tell someone is that, and I think it's easy in what we do to do this, is you have to create a win-win-win for all the parties involved. And win for the developer because they're my client. Absolutely, they're paying my bills and paying and taking care of my staff. Win for the city because they need to be proud of what they're doing, and if they're not proud, if they feel like they're being steamrolled, they're not going to approve what we're trying to do. and we have to get their approval. But then a win also for the end users, the home buyers, people like that, who get the benefit of what we believe is more affordability because of the use of these mechanisms. It's sort of a mathematical discussion, but builders will tell you if we can remove certain costs out of the cost of building a lot and finance them over a 30-year period, if the lot cost becomes lower, then the home price becomes lower. And not everybody supports that. Most of the builders will tell you that is true. But we want to be able to show that, and we do show that to prospective homebuyers, that they're getting a benefit. Us creating this amazing financing mechanism without everybody benefiting from it means that we have not succeeded.
You touched upon a PID. Are there other financing mechanisms that are common or popularly used currently that?
Yeah. The PID law has actually been around since 1987. After certain changes to the statute in 2009, became more usable for residential and other type developments. The largest financial mechanism in Texas is in municipal utility districts. That's been around since the early 80s, and that is more of a special tax district created by developers, a separate public entity, basically controlled by a developer, and they use ad valorem taxes to reimburse developers over time. The biggest difference in the MUD versus a PID is a MUD is all reimbursement based. You have to put the improvements in the ground and usually a bunch of homes on the ground before you can go have bonds issued. But it's a very stable market, very successful market. We do a bunch of work in it, but what we're finding is a lot of cities and counties that historically may have consented to the use of a MUD in their area are now saying they don't want to do that because they're not in control. So Houston area, for instance, is where MUDs were created. There are probably a couple thousand MUDs in Houston, but now we're doing more work there because the cities and counties involved said a homeowner who lives in a MUD has a complaint. They're generally going to still go to the city council or the county commissioners, and the city council or county commissioners can't do anything because it's not under their control. So, and then the third mechanism that gets used a lot is tax increment, known as TIF throughout most of the country. In Texas, we always have our own acronym, so it's a tax increment reinvestment zone, same concept as a TIF. Incremental value is generated, incremental taxes are generated, whether it be property taxes or sales taxes, and those incremental taxes are then, a portion of those are distributed back to the developer. In some cases, we use those TERS monies to help pay off PID bonds to reduce the cost to the users of property in the PID. And in some cases, there's a separate cost reimbursement to the developer. It's a big part of economic development projects because generally it's to reward someone for doing something that otherwise wouldn't get done.
That's a great explanation on all of those. Thank you, Rick. That was very helpful for those that are listening for the first time. Kind of switching subjects a little bit. What are some misperceptions, common misperceptions about land development and financing? I'd imagine you come across, folks in government that, might have misperceptions, or other folks in the industry. Would love to hear, some common things that you're always surprised to find out people are under the impression of.
I think most people would say there's a perception that developers, even if they don't get these programs put in place, they're still going to make money. And the reality is that for many developers, the way costs are today, absent these public financing mechanisms, their projects can't go forward. And a lot of people just don't want to believe that because the perception is developers all are wealthy people who make oodles and oodles of money. And there are people who've made oodles and oodles of money over time, but they're taking the risk to do it. So I would say that what we want to make sure people understand is that our clients are not looking for help they're willing to take the risks on the project. The financings that we do doesn't preclude them from taking on the risk. They take on an obligation that if for instance, the PID has to be paid, and if they don't pay it, it could be foreclosed upon. Or in the mud, they have to fund the money and then get reimbursed. So it's not a free lunch for the developer. Some public officials sometimes will think that they're putting up all the money in this case. Excuse me. And which is not the case. The money is being put up by investors, institutional investors, and the like. So there's no direct investment by the public into these projects. So very often the biggest risk is, why do we want to subsidize a rich developer, to put it bluntly?
Yeah. Yeah, no, I could see how that's an easy misunderstanding or misconception. Tell me a little bit about DPFG's kind of 5-10 year vision. Where do you sort of hope to grow? What areas, either of the country or asset classes or project types?
Yeah.
What's sort of the growth plan for your firm?
Speaking for myself, and I would defer to my partners elsewhere who may have their own thoughts. For myself here in Texas, continue to grow the awareness of some of the ideas that we've had, because not every part of Texas is using them yet, but it's becoming more prevalent. Applying these ideas to a broader types of land uses, like I said, industrial, commercial, mixed use, that perhaps in the past would not have been good candidates. Quite frankly, in today's environment, we're getting more calls because of the cost of private debt and private equity. Public financing mechanisms become a more viable part of the solution. Our territory for our office, our region, is basically from Utah over to the Atlantic Ocean.
Big area.
It is. So continue to expand what we're doing in Utah and New Mexico are currently. I'm most excited about the opportunity to bring some of the types of mechanisms we have here in Texas to Tennessee. We're working with certain groups here to bring this sort of that language and those laws. The Nashville area, for instance, is growing like Austin is, and there's a pressure point on cost of infrastructure, and cities can't finance it themselves, and it's hard for the developers to do, so they have to find a middle ground. So we're hoping that we were able to be successful there and sort of be on the leading edge of what's going to happen there like we did in Texas. We continue to be active in North Carolina on several projects. I expect we'll be doing things in Oklahoma, Alabama. We've done Georgia, South Carolina. So most states have these kind of mechanisms in their statutes. They just haven't been used to the extent possible. So I want to grow our geographic presence, but also grow our sort of land use components as well.
It makes tons of sense. Looking back, or suppose you were to give a younger, the 21-year-old Rick some advice. If you had a time machine, you can go back and you could sit down with your younger self. What advice would you give yourself? One or two pieces of advice.
I have always been on the financial side. I mean, that's my background. That's my experience. I think it's helpful not to become an expert by any means, because that's not the goal, but to have a greater understanding of the physical aspects of development. Spending more time with the civil engineers, with the architects on the vertical side, just understanding, to me, those are just numbers that I got to find money to pay for those things. But to understand how those things are getting done, and are there ways that we can help make it easier? We spend a lot of time with engineers. We try to teach them what we're doing. I think I know some of what they're doing. I would like to probably know more.
Yeah. I think we all would.
Yeah.
I guess I'll wrap up our interview with one last question. And this is, more of an open question. Books that have influenced you, or other podcasts or resources Um, what, what would you recommend, whether it's another
Hmm.
podcast even, or a book or several books? What do you find what have you found most helpful?
I admit I'm not much of a podcast person. This is a great one, so I'm very happy
Thank
to
you.
participate. Um, there was a book, and I think it was called High Rise, and it was basically the history of building a New York City high rise office building. And it was I think it was in the 80s. And what I found amazing was because it was from the vision through the financing, through the building, through the failure, through the foreclosure, through the ultimate success at some point. But
The whole cycle, it sounds like.
the whole
Yeah.
cycle, and to think that the developer, and this was like $260 million worth of project, he put in zero money, and how he was able to get
You
away
can
with
find
that
this
back in
book on
those days.
Amazon.
Yeah, yeah. So I found those kind of stories very informative about what drives people.
Any final thoughts that you'd like to share with us?
The only thing I would say is that development today is a very complicated process, not just the physical issues, the political issues on the entitlements, but you have to become more creative on how things get financed. Like I said, developers who historically never would talk to us are now reaching out. It's up to us to prove our value to show that our ideas can make sense. So I think that the development community needs to be more open to perhaps ideas that they hadn't envisioned in the past, and our world has to understand what they're trying to accomplish, perhaps more so than we have in the past as well. We can't just be a cookie cutter approach. We really have to think through what somebody's trying to accomplish.
Rick, thank you so much for your time. This was excellent to spend a half hour with you on Property Potential Podcast. Truly appreciate it. Thank you.
Thank you, Robert. Pleasure, and I appreciate the
You
opportunity.
got it.
Thank you.
Bye.